So you want to know the hidden key to trading success in the stock market, how you can become profitable and how you can actually start making some money in the market. You know, there's a very few traders that actually understand this. I've been doing this for a long time, over 30 years, and I can tell you right now that so many traders are losers in the stock market. They don't become profitable. In fact, they don't even become break even in the stock market, and that is a big concern for many. Did you know that I always advocate, that I always show in my videos, that 80% of traders lose money? Trading is risky, and if you don't like trading, you probably shouldn't be trading. And if you don't like risk, you shouldn't be trading. If you don't like losing money, you shouldn't be trading. I always put that out to you guys. I always show you the risk disclaimer. But did you know that it's far worse than I actually tell you? You know, between 70% and 99% of traders actually lose money in the stock market. 99%. Can you imagine a statistic of 99%? And you'll be wondering where we got that statistic from. Well, there was a whole bunch of guys at some stage that actually went out there and they did some research. And on the research, they determined on testing a number of a group batch number of traders who effectively, when you look at them, are on about the same qualified level to trade. That batch of traders, when doing 5-minute charts and 5-minute trading, 99% lose. And as you bring the time frames a little bit slower, say to the 4-hour, to the day, and that sort of thing, it drops off exponentially to the 80%, the 70%, and so on. It also is very dependent on the time of the market. If the markets are going well, if the markets are going bad, you know, what time of the year it is, and all these different sort of scenarios that will come into play when you're trading. So what we're going to do today, I'm going to take you to the charts, and I'm just going to show you on the charts what you can do to make yourself a profitable trader, and how you can understand and how you can protect yourself from becoming a losing trader. But what you have to understand is that the market is a 50-50 game. Trading is a 50-50 game, and that you stand a good chance of losing in the stock market if you don't understand that you have to manage your risk. The whole secret to winning is managing your risk, making less on your less losses and smaller losses, and making bigger wins. I'm going to talk about that after we've looked at the charts, and I'm going to explain to you how you can get over this fear and how you can get over this 50-50 scenario, how you can become a profitable trader, and how you can actually make money in the stock market. And I'm also going to tell you a little story about someone who lost a large sum of money. In fact, $300,000 in one shot. So we'll talk about that after the charts. Let's go to the charts. Let's see how you trade on the charts, and let's carry on talking after that. The key to making profit is obviously understanding why so many traders lose money, and why you might be losing money, why you're not profitable, and why you're not even breaking even in the stock market. It's so important for you to understand these few key principles. The one key principle is placing your stop loss and managing your risk. How do you calculate your trade? So here's a trade: trend resistance, trend support. We've noticed the trade coming into trend support, and we've taken the long trade because we got the green candle, which told us that it's time to take the trade. We take the long trade, understanding that we could lose, that it's a 50-50 game. There's a 50% chance you're going to lose this trade, and there's a 50% chance that you could win this trade. So if you lose this trade, where are you going to place your stop loss? Well, at an invalidation point. Where's the invalidation point? Below the trend support, where you know that if you looked at the trade, you'd probably think, well, this is no longer a long trade, this is now a short trade. Place it below the last low, because that is also a support on its own. You know how we draw support and resistance on the day chart and the little block and whatnot. This is just a trend support that we're looking at here today. We put our stop loss down here at 599.63, and it is now clearly in a safe place. If it comes down, we lose $600. Now, what's the policy on our trading? The policy on our trading on this account is a maximum loss of $1,000 per trade, but try to make $2,000 per trade. This is close enough. We're aiming for $1,837 on a $600 loss. Try and keep the loss the same. But I don't need to put the stop loss all the way down at $1,000. I want the stop loss at 142.50. The size of the trade is more than good enough for me. I could have gone bigger, but no need. And the risk is the way I want to see it. Now we can at this point already move our stop loss up into break even, but I'll give it a little bit more chance and see how it goes. Looks like it did. Okay, so the footsie trade got stopped out. All right, that's fine. No problem with that. But it was stopped out in a profit because I left it in a profit. So that would have given me some kind of a profit. So it looks like it stopped out. So I wasn't watching the charts. I don't sit and watch the charts. So I got in for a short trade. It's turned around, gone back, and taken out my break-even stop loss. Well, it wasn't actually break-even. It was in a positive. So that's all fine with me. We're actually not losing a cent, making a profit there. So I'll show you on the Nikkei, which will be a similar thing. You'll see that I've moved the stop loss into positive, which is now, if it loses, it'll be plus $35. Our target is down here at the 2,227, and our stop loss was way up here, and it was about $780 or something to that effect, close to the 1,000. Stop loss, 1,000 or less, try to make $2,000 profit on every trade if you can, except in the case of the footsie where I had a trade running. I brought the stop loss down to break even and it took the stop loss out. Probably made like $30 or something. But do you know what? That's actually okay because you haven't lost anything. You've actually gained the $1,000 stop loss, which you are not going to lose anymore. And it's just one of those trades that hasn't worked out while the other trades are working out. Now this morning this trade would have been maybe $580 in profit, and now it's down a bit, but we leave it because we're looking for a target down at the bottom here. Our worst case scenario is looking at this demand level. If it reaches that, we could have some issues and we might want to be getting out of the trade. But all the way down here, we're going to be moving our stop loss down. We're going to be adding to the trade where we can, and we're going to try and make this as big a trade as possible because that's how it operates. If you look at our US dollar Japanese yen trade that was taken earlier, it's in profit already. It's doing quite well, and that doesn't mean that we should get out of it, because a lot of you guys, the big mistake that you make is you look at this trade, you see it's in profit, and you immediately close the trade because you think that you've got a profit now and a profit's good, so you must take it. But the problem with that is, and that's why most traders are losing money in the stock market, and very few traders understand this or know this. The point is, try and keep your losses constant. So if you lose a trade, $1,000 or less, try and keep your wins constant. If you win a trade up to $2,000 or more, in this case it's a little bit short, but it's close enough and it's okay because that's where I want my target. That way, when you lose 5 trades out of 10 and they're $1,000 or less, you stand to lose a maximum of $5,000. And if you win 5 trades with $2,000 or more, you stand to make around $10,000, which gives you profit of $5,000. And that's what you're trying to do. You're trying to get that profit. You're trying to gain a profit in the market. Your win percentage ratio is meaningless. Trading is a 50-50 game, no matter what you do. There are buyers and sellers in the market, and everybody wants to win the trades. Whether you're winning or whether you're losing is meaningless. Your win ratio is meaningless. For example, this footsie trade, which has taken out the break-even stop loss, a little bit of profit, it was actually in profit. And if you've got a system that works out your profit loss or your win ratio, it's going to tell me I've got an immensely good win ratio because I always move my stop losses into profit. So every time I win, it picks up that I'm a winner. It picks up that my win ratio is quite high. But it's tiny little wins on those stop losses that are making my win ratio so high. So real trading is about making a profit. Real trading is about being profitable. And that's where traders make the mistake. You know, 99% of traders on the 5-minute charts actually lose money. And that's the scary part. You really shouldn't be trading on those low time frames because I don't know many people that know how to or can actually do it. What I would recommend to you is rather leave your trading on the higher time frames or the 4-hour, the day, if you want to do investing. Because like this, you can leave the trade. You've got all this space to play with. You're not getting stopped out every 5 minutes. You're not over trading. You're not sitting looking at the charts all day. And because if you sit and look at these charts all day, if I sit and look at this on a 5-minute chart all day, I can almost guarantee you that I will overtrade. I'll be taking these profits and stopping out because the psychology behind it is in your mind. You start seeing things that you shouldn't really be seeing, and you start thinking, I need to take that profit. I need to get out. There's maybe a news item on the side that you're listening to or something's coming up, and you just decide to get out of the trades too early, and you end up messing around with your trading. So it's better to walk away and just leave the trades standing as they are. This way, they don't irritate you. They don't bother you. Now I'm looking at this and thinking I need to move my stop loss up. There's no problem with that. I can do that. I can effectively, instead of losing money on this trade, I can take my stop loss up to here if I want to and put it at the cost level. I can modify it, boom, and just like that, my stop loss is in profit. I can't lose any money now. You see? Now you are, why can't I? You know what? Sometimes I just wonder. Okay, let's just take that out. Do that. Put that back. Okay, there you go. Sometimes it's just tricky. See, now the stop loss is in a positive. Now, if this trade wins, if this trade comes back and takes out my stop loss, then it's going to show on the statistic that I've got a high win ratio. But you can see my win on that will be like $19. I mean, it's an absolute joke. But what I've done is I've just saved myself $600 in loss. This trade is a free trade now. It's completely free. Yes, my stop loss is now pretty close to the price, which you don't really want. But, you know, if you leave it down there, what for? It's almost at a point where you could bring your stop loss up at break even anyway. You might as well. What I normally do is I wait for the same amount as my stop loss to give me a pointer on the positive. But in this case, I'm just bringing it up to the line here and we'll see what happens. Hopefully it'll continue on in that direction and it'll make us a profit. So now the stop loss is at cost. We walk away, we forget about it. And the Nikkei, same story. The stop loss is at cost. We walk away, we forget about it. If it goes all the way back up here, takes out the stop loss, so be it. But that's the important thing that you need to know in the stock market. You need to know that the most important thing to trading is actually managing that loss. So guys, that's the charts. We'll get to the free gift in a moment and what's in the description for you and all the rest of it. But let's start off with, you know, I once heard of a trader that, well, trader's wife, who contacted for help and said they lost $300,000 day trading. $300,000. They only earned about $30,000 a year. And it's kind of questionable as to how do you lose $300,000? And that's how quickly life changes in a game like this. You know, the trouble with trading is people don't understand the risks of trading. The risks of trading are higher, and most people will actually lose. Most people will actually lose money when they're trading in the stock market, because they don't understand the risks and because they don't manage their risk. Can you imagine going to tell your family that you've lost $300,000 if you're a person who earns $30,000 a year? Can you imagine trying to sleep at night when you can't feed your family, or you know they're going to come and repossess your house or something to that effect because you blew it all up in a trading account? You know, a person like that really shouldn't be anywhere near a brokerage account. They shouldn't be anywhere near a trading account. In fact, keep them away from casinos at all costs, because obviously they're addicted to it. And we all get addicted to it because that's what trading is about. You get addicted to this. It sometimes can become quite an adrenaline rush. And the problem with trading is, at the end of the day, making money should be boring. If it's exciting, something's wrong, because it is nice to make money and it is exciting to make money. But if you're just trading and you're getting adrenaline rushes and you're getting excited, there's a good chance that you're over trading and you're probably going to lose the money somewhere down the line, because it's always that one big loss that takes people out. Now, how do you end up losing $300,000? How do you end up taking such a big loss on any given trade? Well, firstly, we're trading with geared trading. You know that we're trading with 10-to-1 ratios and such like types of trades. Okay, so for every $10,000 you spend, they're giving you $100,000 to spend, and all it takes is one weekend where you've left your trade in feeling very confident about it, and you come back on Monday morning and the world has ended over the weekend and your stop loss doesn't get taken out because the markets are closed, and when the market reopens on Monday morning, it opens $300,000 away from where your trade was, and you've lost $300,000. That's as simple as it gets, and that's as quick. You can go bankrupt over the weekend and there's nothing you can do about it. Absolutely nothing you can do about it. That's why I advocate not leaving trades in over the weekend if I can help it. On Fridays, I sometimes don't even trade if I can help it, because those are the dangers of trading. Managing your risk is one of the most important things that you can do to win in the stock market and to protect yourself in the stock market. The whole point is, when you take a trade, you have to understand that you have a 50% chance of winning and you have a 50% chance of losing. because you have to stop looking at the charts as charts. You have to stop looking at the stock market, Forex, and all the rest of it as just charts, as just little pictures, and start understanding that there's human beings behind those pictures, real human beings trading real money, and all of them want to win, and all of them believe they've got a system that's got the edge. You can have as big a win ratio as you want. The win ratio, as you would have seen, I told you in the charts, the win ratio is completely irrelevant to your trading. It really doesn't matter how good your system is, how many times it can win, or what it's all about how you approach your trading. It's all about your strategy. And once you learn to lose, so once you start covering your losses, once you start understanding that every trade needs to be the same amount of loss or less with big wins, then you'll start winning. It's about how you approach making a profit out of a business. Have a business plan. You don't have to write it down. My business plan is simple. Okay, the business plan works as I'm going to lose a maximum of $1,000 on every trade, and I'm going to make $2,000 on every trade or more. And that's the business plan. Doesn't get complicated. Then part 2 of the business plan, because there is only 2 parts to my business plan, and that is part 2 of the business plan is when the trade goes into profit, move the stop loss up and keep moving it up and add to the trade when I see the opportunity and make as much money as I can on the profit going up. Because when I take a trade, every single trade that I take, I believe it's going to win because I'm a trader. I believe that every single trade that I take, that I click the button on, that's going to be a winning trade. I don't click the button if I think it's going to be a bloody losing trade. Why would I do that? Why would I click on a button and think I'm going to lose this trade? I think I'll take that trade. I don't know anyone who would do that. So I'm pretty sure that you guys, when you click the button, you believe you've done all your homework, you've looked at the trade, and for sure that's now going to be a profitable trade. That's now going to be the trade of the day. And then suddenly it goes against you and you start losing money on it and you start getting confused. And this is another way that you can lose that $300,000 in a day. And then it starts working against you and you start going into loss. So the first thing you do is you move the stop loss away, because you don't want, that's the last thing you want to do. But this is what you do. You move the stop loss away, don't you? Because you think, well, I don't want to get stopped out because then I'm out of the trade and I've lost that money. So your fear is telling you don't want to lose any money. So you move the stop loss away so that you can't lose any money because you're still in the trade. Funny thing though, when you're in profit, you don't move the profit margin away when you're in the money. Strange that, isn't it? Then you rather get out of the trade and take the profit. But when you're in a loss, or you'll stay in that because you're still in the trade. Doesn't make sense to me, guys. Doesn't make sense. But then the next thing that you do, what do? You think, well, I'm going to hedge this and then I'll get out of the trade in a profit or at break even, which is what you wanted to do in the first place. But anyway, now you double up on that trade because you can afford to. So you double up on that trade. Now you've doubled up on it. Now you think, okay, this is fine. Because now it's going to turn and go back the other way like it should. And I'll break even and I'll be able to get a relief out of this. You know, I'll get out of the trade. And guess what it does? It keeps on going further and further and further. So you double up again because you can afford to. You know, it gets to a point where you can't afford to keep on going. You get to that $300,000 loss and you just don't have the money and you just have to get out. And this is the problem. So if you don't get out quickly and you don't take those losses quickly, what actually happens is you get locked in. You get locked into the trade and you just don't want to get out because the loss is getting bigger and bigger and bigger, and your fear or your brain is telling you that if you get out the trade, you've lost that money. So what I always say is trade within your means, number one. Whatever that loss size is that you're going to trade on every single trade, make sure it's within your means. If you go to sleep tonight, that you know that if you've lost that money, you can feed the family and it's not going to destroy you. Then make all the losses sizes the same. Don't make different size losses, and because you feel you can trade one instrument better than another, you're going to put a bigger stop loss on that one. No, don't do that. Try and keep them the same as far as you can. You can make them less. Don't make them more. Have a maximum stop loss. Say, my maximum stop loss on every single trade is $1,000. I will not lose more than $1,000 on every single trade. Maybe it's $250 depending on the account size. Doesn't matter. Now, if you've got a $100,000 account size and you're saying I've got $1,000 stop loss on every single trade, that doesn't mean you're only trading $1,000. You can take 20 trades. You can have a $20,000 risk in the market, but at the end of the day, you've got it spread across 20 instruments. You should win 10, maybe lose 10, and you should be profitable if you're making $2,000 or more on every single trade. That's the basis of the trade. That's the basis of the business plan, so as not to lose money. Because if you take the loss quickly, if you take the $1,000 loss, so when you're getting into the trade, you've already decided, I've paid $1,000 for this trade. Whatever happens, I've paid $1,000. Goes into profit. profit, you put it at zero, you've actually scored the $1,000 back and you've got a free trade. As simple as it gets. It's all about how you approach the market. Very few traders understand this. And this is why 99% of traders are losing money in the stock market, because they don't understand how to lose. And they don't understand that it's not about charts, it's not about systems, it's not about strategies. There's a whole bunch of young guys out there promoting to you that you can just make shitloads of money on the stock market, and you can't. It's not that easy. It's not that simple, guys. Not that easy. Guys, I got a free gift for you in the description. Free Forex book PDF. Go down there, go and grab it for yourself. Totally free. Go and enjoy it. Go and give it a read. It's about trends. There's 3 ways to trade in the stock market from my side. One is with the trends, one is with the overbought, oversold situation, and one is when it's trading in a range. I don't get complicated. I don't go and wait for the stars to align in the left and the stars to align in the right and the moon to turn into green cheese before I take a trade. I take a trade when a trade is actually available to me, and I take it in the most simple basis possible, because it really doesn't matter what strategy, really doesn't matter what system you're using. At the end of the day, the market's going to go either going to go up or it's going to go down. There's no 2 ways about it. So just understand that the market can go one of 2 ways, and you're just going to choose a direction, and which, if it goes in your favor, you're going to win. If it goes against you, you're going to lose. If you start losing and you're losing, have a set amount of money that you're prepared to lose on every single trade. The chances of you losing 10 trades in a row, 20 trades in a row, that means you're having a really bad day, a really bad week, whatever the case. So the chances of you winning 10 or 20 trades in a row is also pretty much against you. You're going to have to be one extremely lucky dude for that to happen, because the market is structured that way. That's how it is. Guys, don't forget, I've got trade of the day every single day. I put it out on the blog. You can go and check it out. And I normally post it on the YouTube community, so you can see that you can go to the blog and go and get the trade of the day every single day. It's just an idea. It's not trading advice. It's there for you. And for the members who join on YouTube, they get a video every day. They get a bit of information. They also get all the which way I think the markets are going to go in which direction and that sort of thing as well. Early access to videos. There's a whole bunch of things that you can get as a member as well. And you've got direct contact to Uncle Rob. Guys, I don't consider myself to be a guru or anything like that. I'm just out here trying to show you how the stock market works, why it works like it does, and how to protect yourself from becoming one of those statistics in the market that has to call in for help and say, oh, my husband just lost $300,000 on day trading. You don't want to become that statistic. You've got to protect yourself from that scenario. I know a trader that woke up on Monday morning and everything was gone. I mean, that is horrific. It teaches you a lesson, though. When you've been trading for 30 years, it teaches you a lesson when you see it happen to someone else. And you think, oh, thank heavens I didn't leave my trades on over the weekend. And then you think, sure, that poor oak, imagine if I had, so just keep that in mind. You learn lessons from other people. So when you take those gambles and you take those chances and you leave a couple of trades in, just remember that you're taking a gamble doing it. The world could end over the weekend and you could be in big trouble. Watch what you're doing when you do that. Watch how you do it. Manage that risk, guys. Manage that risk. Don't forget to come back and watch Saturday's video, which will be all about the week that was and last week's trades, next week's trades, and where I think the market's going to go. I see a lot of people don't come and watch that video on the weekend. Don't know, but I'm going to keep putting it out for now. It might be of interest to quite a few people. There are a lot of viewers that watch it. Let me be perfectly honest, but I'm just looking at it from the basis of against the other information that I put out there. But guys, thanks for watching. Don't forget to come back and watch tomorrow's video and also Monday's video. Join us for the live sessions on the Tuesdays and Thursdays. Till the next video, guys, thanks for watching. Don't forget to like, subscribe, and comment and all that sort of stuff. I don't even know how to say it, but thanks and cheers and bye.